Evolution of a trade. In this video, I'm going to break down what's the evolution of a trade, and I'm going to give you a full trade walkthrough showing you each stage that kicks in when you guys take on a trade. So let's get started. So evolution of a trade. So there's three stages when you take on a trade. Before the trade, during the trade, and after the trade. Now, as I mentioned before, that when you guys are trading, the main thing everyone focuses on is before the trade. This is where all of the tension goes towards. Now, you as a trader, what you need to understand is that a lot of attention needs to go on here. This is the area that is going to control your trading, right? Because if you don't put any focus on this aspect or this stage, you are not going to come out having a good trade. And having a good trade, this is also something I want you guys to understand. Having a good trade does not always mean making money, right? You can take on a trade, lose money, and that could still be a good trade. A good trade means you have a setup, you manage the setup the right way, and maybe the trade worked or it didn't work. Now, sometimes you may take on a trade, right? You didn't manage it properly, and you maybe got lucky and made money. It may look like that's a good trade because you made money, but that is not a good trade. A good trade is where all three of these kind of connect. Now, with most traders, there's a disconnect with all three stages. A lot of traders look here and look here. They don't look at the middle stage. What we want to do is we want to make sure all three are connecting. This is all in between, right? We don't want to be a different person here. We don't want to be a different person here, and we don't want to be a different person here. We want to understand that the mindset and the game plan is followed through and managed the right way. Most traders are not doing that, right? You probably seen yourself, maybe if you have traded up until this point, that when you create a trading setup, everything looks phenomenal. Like right here at this point, everything looks great. Everything looks beautiful. Like, wow, I have a point before this trade. I'm gonna get in this trade. If it goes up, I'll make this much. If it goes down, I'll lose this much. But then the moment you get during this stage or in this stage, everything goes out the window. That's why managing the position is one of the most important parts. And then obviously there's things that need to be done after the trade for you to actually connect all three. So I'm gonna show you guys examples and what needs to be done on each stage. So first stage, before the trade. Now, before the trade, these are some things that you're kind of doing or you should be doing. Finding a setup. You're looking to find a setup. You're looking to find a good, high quality setup, right? You're looking to find a trade that gives you high reward, low risk, right? You have a reason to enter the trade. You're identifying your reasoning for taking the trade. Hey, why am I buying this stock? Hey, why am I selling this stock? Why am I even taking on this trade? There needs to be a reason. There needs to be a high probability. There needs to be a good setup. Now, obviously, once that's all done, that kicks in with having an entry point, having an exit point for a loss. Every single trade you guys take, you must have an exit point for a loss. I've mentioned this so many times, and I'm going to mention it again. Every single trade you take, I want you to establish a level where you are going to take a loss. That is a very important thing. Next, your profit target. Where do you potentially look to take profits? What is a good area based on the charts? You're not gonna pick random numbers. You're gonna look at the chart and get actual information and take the trade from there. Position sizing. How many shares are you gonna buy? How much money are you going to risk on this trade? How much can you risk based on your account size? And then obviously the final thing, any key things to know, right? Maybe is there any earnings coming out, any major company news, any major economic event, anything that will maybe disrupt this trade or make things go the opposite way or something that may be in the unknown. So these are some things that you as a trader have to understand before you take on a trade. Now, obviously this sounds very simple, very easy because, identifying this point, identifying that I'm gonna buy at 10, right? I'm gonna look to sell at 12. My stop loss is at 9. I'm buying because of this reason. I'm selling because of that reason. creating that, once again, is the easy part. This is where a lot of traders get very excited, very happy, and they're like, yes, this is very fun. This is how I'm gonna go about the trade. Now, the tough part comes in after this, which I'll show you. So let's look at a real trade. So we're looking at Tesla right now, right? So Tesla, we are looking at it on a 5-minute chart. We are looking to day trade this, okay? Our day trade is where we are looking to be in this trade in and out and close our position by the end of the day. So our trade is telling us, hey, if this stock breaks 236.5 and we see a strong break, that's where my entry will be, right? If this stock, right, can break 235.4, that's where my stop will be. That's where I'm going to exit for a stop loss. Like, meaning if the stock gets here, I will take a loss. Cool, that's set out. Next, where is my profit target? My profit target is at 239.5, right? So my profit target set, right? My stop loss is set, and everything with the trade is set. Now, why am I taking this trade? I'm taking this trade because I'm just gonna give out random reasons, nothing really direct. I'll show you more direct reasons in part 12. But let's just say, if I see a strong breakout on high volume, I see the market being strong, maybe I'm watching the tape, I see strong buying pressure kicking in, a lot of different factors. Once those factors are evaluated and they make sense, you then go on and you say, okay, once again, my trade setup is, okay, if I get in this trade, right, this is my profit potential, which is pretty good, and this is my loss potential. So I'm basically losing about $1 on the trade, and I'm basically making $3, right? That's my setup. Now, what I want you to understand is just because that's my setup does not mean that this stock is gonna go perfectly to 239.5, right? This stock may go up and dump right away. It may go to 238.5 and dump. It may go to 238 and hold. It may go to 237 and hold. It may go to 239, take a break and continue. I don't know what's gonna happen. No one knows what's gonna happen. But the only thing I know right now is that I have a high probability setup if and when the stock can break 236.5. If the stock breaks 236.5, what I will do is I will then get in. Now, obviously, once again, I need a plan. My plan is if it breaks 236.5, I will buy. I have an area for stop loss and I have a profit point. All of these points are set out by me before the trade. Now, once again, key thing to keep in mind is things are not always going to go your way. And if they don't go your way, how do you as a trader adjust? Okay. Now, you take on the trade and you are now in the position. The stock breaks this point, right? As soon as it breaks this point, you now enter. You're like, I am in, I have my trade set up. Now, while you're in the trade, what do you do? What is your goal? What is your job? Now, your job is, number one, you need to be able to adapt to changes after you get into the trade, right? Before the trade, when we create this plan, the problem with that plan is a lot of traders are locked in on saying the trade has to go this way. No, that's your plan. And if anyone here has ever set up plans, be it with trading, be it with life, you should understand by now, plans are just frameworks, right? If your plan is to go from point A to point Z, like this, you have to understand that life is not going to give you that direction. And that same thing works in trading. You might have to go this way, this way, this way, this way, this way. Maybe you get there, maybe you don't. But you're going to have to make adjustments. To be a good trader, you have to be able to make adjustments. And that's a very, very important concept. Next, during the trade, do not focus on your P&L. Don't even look at your P&L. A lot of traders mess up because they look at just their P&L. They're too focused on how much they're up by and how much they're down by. Do not focus on your P&L. Ignore your P&L. Look at the price chart, follow your game plan, and take the trade from there. Next, will you scale in or scale out? Are you going to add to your position? Are you going to take some position off? What is going to make you add? What is going to make you take off? These are things you have to be very, very well adjusted to, and you have to have a strong understanding on. When will I add more to my position? When will I take some off the table? What do I do if I'm scared? What do I do if I'm uncertain? Because when you take on a trade, after 20, 30 minutes, sometimes you may be uncertain and you're like, wait, I don't really like this trade anymore. Now, if that happens one time, two times, that's fine. But if that happens every single trade, then there's obviously an issue. But if it's happening here and there, sometimes not an issue at all. But you need to understand this. Are you scaling in? Are you scaling out? Next, you also need to understand this concept. Very, very important. Your reward to risk ratio changes. What do you do now? When you get into a trade and the trade goes your way and your reward to risk ratio changes, what do you do, right? Do you move up your stop loss? Do you take some profit off the table? What do you do? And then obviously moving up your stop loss, when do you move it up? When's a good level to move it up? All of these things have to kind of be understood. Now, obviously, when you guys take a trade like this, right? Obviously, as you progress and as you start becoming better traders and as you start getting more comfortable, these things come to you very quickly, right? When you first start out, it's like, whoa, what am I going to do? This is so much. I need a checklist. Did I do this? Did I do that? No. Once you start practicing, once you start getting better and better, these things just start clicking. You start knowing, okay, I know how I'm going to react here. I know how I'm going to react there because I have done it so many times. So if it happens again, I know how to react. So you start building on that. So the first few times, it's going to feel very overwhelming. But afterwards, I promise it's going to get very, very easy. Now, during the trade, first part, let's say part one, right? You get into the trade, right? The stock keeps going higher, right? You want to profit at 239.5. Now, in this situation, what do you do? I want you to look at this and I want you to understand. What are you doing right now? Okay? Let's understand the trade. The stock is at 238.6, right? So basically, it's up. We are up $2 on the trade. So basically, a little under 2, but let's just say 2. Right now, we are green $2. Okay? Now, our profit target is about $1 away. Now, this is where the trade changes, and this is what a lot of people overlook, right? Stay with me here, lock in, and just think about this for a second. So right now, the stock is at 238.26. So let's say 238.5. Okay, you're up $2 from your original entry point. It needs to go up $1 more for you to make your potential profit point, right? Now, when you look at this trade, where is your stop loss? Your stop loss is at 235.4. So basically, when you look at this from a mathematical standpoint of view, the stock being at 238.5 and it having to go to 235.5 about, that's a $3 move down. So now think about this, guys. Right now, with the way the chart is looking now, you are basically risking $3, right? You're risking $3 to make $1. How does that remotely make sense? It doesn't make sense. Not at all. Not even 1%. This does not make sense at all, right? And this is where during the trade, a lot of people overlook this. They overlook this concept because at one point you had a risk to reward ratio, reward to risk ratio where your reward is $1 and you're risking $3. Now, the reason people overlook this is because when you're in the trade, right, you forget about it. You think, oh, I'm green, I'm up, let me forget about this, I just gotta wait for $1 more. No, you still have to manage the position. As the position goes more and more in your favor, the reward to risk ratio kind of gets different. As it gets different, you need to be able to adjust and make the appropriate changes on what are you gonna do. So at this point, everyone is gonna do something different. Like everyone watching, everyone is going to do something different. I'm going to do something different. You're going to do something different. Another person is going to do something different. There's no right approach, right? I don't want to say like there's any sort of right approach. It depends on what you're comfortable with. Now, there are some things that you shouldn't do. What you shouldn't do is you should not leave your stop loss down here. That's way too low. You're risking $3 to potentially at this point make $1. Doesn't make sense. Because if you look at this new trade, let's look at this as a new trade, guys. Stick with me here. Let's look at it as a new trade. Let's say right now stock is at 238.5, right? Would you buy at 238.5, look to sell at 239.5, and put your stop loss at 235.5. Once again, would you buy here, look to sell there, and put your stop loss here? No, you wouldn't, because you're exposing yourself to too much risk. So what difference does it make if you're already in the trade? And that's a great way to look at trading. When you're in a trade, look at it as in, if I was to trade this now, would I get in? What would I do? And that makes you kind of, that questions you and that challenges you at that point, and you start thinking like a real trader. Now at this point, me personally, what I would do and what I think is one great thing, depending on the trade and depending on how confident I am. If I'm super confident here and I still think the stock has room to run up, cool, I'll leave my position, I'll move my stop up. But if I'm not confident, let's say I'm like, I don't know, it's moving up too fast, I think it's gonna dump, whatever reason I may have, let's say I have 100 shares, I may sell 50. I may scale out. I may take some off the table. I may lock in profits because I may not be comfortable. That's one thing I may do. Another thing, which is something that you should be doing, is I would like to move up my stop. I would like to move up my exit point. Maybe to 237.5, something around here, 237.2, maybe something around there, and say, you know what? Now at this point, I have basically locked in profits. Even if it comes down here, I make money. I'm not walking away without making any money. That's number one, right? Number two is I'm also now risking basically this much to kind of make this much, about 1-to-1. Not the best risk to reward ratio, but I still have at least a minimum 1-to-1. Now, obviously, as the stock progresses, I can find new levels. So let's look at part two. Look what happens at part two. Stock goes up, consolidates, continues. Now, based off our original entry and trade, this was our original trade, right? So we had the stop here, we had our entry here, and we had our profit target. Now the question is, what do you do? Let's say you didn't scale out. Let's say you didn't do anything. You're still in the position, full 100 shares in the position. What do you do? Being 100 shares full in the position, you're up about $300. So right now your P&L says you are up $300. What do you do? Now, the problem people have here is obviously there's people that can directly look at this and say, I would exit. But you have to understand, when you're in a trade and it keeps going your way, there's a little piece of you that says hold. Why does it say hold? Why do you think it says hold? It says hold because it's telling you this is gonna go higher. Why are you gonna sell? Right? There's a lot of different thoughts that kick into your head at this point where it makes it harder for you to sell. Now, obviously, like I said, everyone is going to approach this trade from a different perspective, and they're gonna have a different approach. At this point, the first approach is you selling your full 100 shares, you locking in your profits, $300, and you're saying, okay, I followed my plan, I made my $300, I made 300, I risked 100, trade worked out, great. A second approach someone may have is, you know what? I think this can go higher. So I'm not gonna sell. I'm gonna move my stop loss maybe to 237.8 or 238, let's say. I'm gonna move to 238 something, right? Let's say 238.5. I'm gonna move my stop here, and if the stock gets down here, I lock in this much profit. I won't make the full 300, but I'll make about 250. But I'm making 250, I'm risking $50, which is right here, to potentially make, because if it can break 239.5, which is maybe a resistance point, I'll maybe make another $200-300, right? So that's another approach someone may have. Another approach someone may have is, you know what? Let me sell half. I'll lock in $150, right? So I lock in half of my position, I sell half, and I risk the remaining half, but I still put my stop loss here. So let's say originally I had 100 shares, I sold 50 here, my stop loss for the remaining 50 is right here. So now if it comes down, cool. If it doesn't, I let my remaining 50 shares ride out. That depends on you. Either one of these are fine, right? There's no wrong in this, right? And some people just rather, wait for the position. Some people just get too carried away and they get stuck, right? What we don't want to do is we don't want to get stuck. We want to be able to know how we adjust. And a lot of this adjusting concept comes in with emotions, right? And if you haven't traded yet with real money, you're not gonna understand until you do start trading with real money. A lot of times when you guys are trading, emotions really overtake when you are in the position. So that managing the position part becomes a lot harder, okay? Now, let's go to part 3. Let's see what happens. Boom, part 3. Now, at this point, what did you do? What happened? Right? What situation, what did you do? Now, a few situations could have happened. A, you probably once again sold, right? Let's say you did sell. Let me just clear this up. Let's say you did sell, okay? Let me just move this. So let's say you did sell. You sold your $300. Now, if you sold at 300 right there, you are pretty damn happy right now. You're like, yes, I sold at 300. I am the best trader. And you start going off about it. Not a good approach. You took the trade. You followed your plan. Cool. Now, these two concepts kind of get hurt. Now, obviously, like I said, managing the trade or setting expectations or setting goals are easy, but actually following through and adjusting is the hard part. So at this point, what happens is the people that were supposed to take a take a loss here, who maybe had half of their position or maybe moved up their stop loss, they either sold it, trade worked out, great. Sold, trade worked out, great. Now, there are some people, and I'm pretty sure some people watching this has happened to you, where your trade was to have your stop loss at 238.5, but the moment the stock went to 238.5, you did not exit. Now, you guys may be looking and saying, what do you mean I didn't exit? Of course I would exit. I got in here, the stock went here, it didn't, I thought it was gonna go higher, I didn't sell, but I set my stop loss at 238.5. Of course I'm gonna sell. No, that's where you're wrong. Because what you have to understand, and this is where don't look at your P&L kicks in. At this point, at about 2 p.m., your P&L showed this, right? So at 2 p.m., your P&L showed $300. You're up 300. About a few minutes later, right, towards this point, your P&L starts showing 250. Now, obviously, when we add more zeros, this starts adding up. The more shares you have, the more money it adds up to. Let's say 3,000 and 2,500. Let's just make it a little bit bigger so people can feel the real difference, right? That's a $500 difference. Now, what starts happening at this point is you start saying, oh man, I just had 3,000. I only have 2,500 now. No, I want the 3. I saw the 3 in my account. I want the 3,000. I don't want the 2,500. That's where emotions start kicking in. And that's why managing the trade is very important, because you also want to know where your emotions step in. What do you mess up on? How do you change as a person, right? What choices do you switch up? You might say, okay, 2,500, no, I don't want to sell it for 2,500. I want 3,000. Nope. Stock pushes down more, and now it goes to 237.5. Now, instead of you being up 2,500, you're only up 1,500 now. Now you look at your P&L and you're like, oh shit. Oh man, I'm only up 1,500. I just had 2,500. No, I need my 20. Forget the 3 grand. I need the 2,500. Stock goes back up, you're back up 2,500. Now, since you see that move up, you're an emotional mess. You're like, no, 2,500. If I wait a little bit more, I can probably get my 3 back. At this point, because of this move, you're already an emotional mess. You're not thinking clearly, right? And this happens to a lot of traders, no matter what level you're at. You have bad days when you're not emotionally there. You're not disciplined enough to, take on the right move. And then what happens? Stock starts going all over the place. And then with some people, they end up only taking a $1,500 profit. For some people, stock goes to their stop loss, and now it even becomes worse. Now you're in a trade where you are up 3,000 to 2,500 to 1,500 to having a trade where you're negative 1,000, right? And then that's where people say, nope, I'm not selling for a loss, and they end up holding a loser. So understanding this process of your mind and understanding how you switch up, how you react when you're right on the trade and it goes your way. Do you sell? Okay, you don't sell, you maybe move up your stop loss. Do you sell when you move up your stop loss? Do you cancel your stop loss? How are you managing this position? What are you doing? What is your new goals, right? Some people may say, hey, if I see this stock can break 239.5, I move up my stop loss here and I add more. I buy more and I add more to my position. Once again, everyone has a different perspective as a trader. There's no right or wrong, but there are certain things you should not do, such as leave your stop loss down here. You should not following your plan, not executing when you should. Even if you adjust your plan, not following it and letting a winning trade turn into a loser. These are things that real traders do. Like, they make these mistakes over and over again, and then they're just not able to be profitable. Like, getting in here, finding this trade is not hard. But this mess in between, that's hard. That's the hard part, right? Now, after the trade, once you do make the trade, let's say the trade is done, whatever you did, you have to analyze it, right? You have to review your trade, okay? Review your trade, go over your trade. Did you follow your plan? Yes or no? What didn't you follow? Why didn't you follow it? What could you have done better, right? Oh, I didn't execute at my stop loss. I should have executed at my stop loss. Wasn't done by me. Terrible mistake. Did your emotion step in? If so, how? Yes, my emotion stepped in. I was up 2,500, but I wanted to take 3 grand. Then I was up 1,500. I wanted the 2,500, and now I walked away with the losing trade because I got greedy. I looked at my P&L, right? Did anything new pop up while you were in the trade? Did maybe some new news come out? If new news came out, did you adjust your trade? Did you do something differently? All right, these are questions you need to ask. You need to monitor these things. You need to understand them, okay? Journal your trade, review, learn, and move forward. Every single trade you guys take, let me put this in red, every trade, I don't care if you buy 1 share, I don't care if you buy 1,000,000 shares. Every trade you take needs to be journaled. There needs to be a full journal of your trades. I have an Excel sheet and I have a form that I'm going to show you in the upcoming videos that I'm going to share with you guys that you can use to journal your trades. Every trade you take needs to be journaled. Winning trade, losing trade, doesn't matter. You should know after a few months where your emotions step in. Where do you mess up? What needs to be improved? Like, these things have to be tracked. If something is not tracked, it's not going to get better. So every trade you take on, guys, moving forward, please track it, please note it down, and have a log of all of your trades, right? Now, just to recap on this trade, the whole walkthrough of a trade, guys, once again, is the pre-trade, before you enter, during, and then obviously when you exit. And then the whole idea is to identify what you were gonna do before, did you follow it, and then obviously reviewing it. Very important to understand these stages of trading, and very important to understand the middle aspect, which is managing the position. If you can comfortably manage a position, if you can comfortably adjust to market conditions or adjust to price action and make quick changes, especially if you're day trading, especially if you're scalping, even if you're swing trading, that's going to make you a very, very good trader. But if you're unable to adjust, if you're unable to process things at a very, very effective rate, you're going to have a hard time.